Okay, so let's dive into this. You probably saw the headlines earlier this year. News that sounded, well, frankly, pretty final for a company basically everyone knows, 23andMe.
Right, yeah, the news broke in early 2025. Confirmation that they had indeed filed for Chapter 11 bankruptcy protection.
And if you're anything like me, maybe like a lot of people, the first thought is, okay, well, that's it then, you know? There goes the whole personal genomics dream.
Mm.
Too complicated, or the business model failed. Maybe the privacy stuff finally caught up. Just game over.
Yeah, that narrative really took hold fast. And, I mean, looking at their recent history, especially since they went public, you could see why bankruptcy felt like maybe an inevitable endpoint to all the struggles they were having.
What if that first take, that common idea that this was just, a straightforward financial crash, the market saying no thanks to personal genomics, what if that's not the whole story? What if, and this is what the sources we've been looking at really dig into, what if this whole messy period, the bankruptcy itself, is actually more of a fundamental transition?
A transition. How so?
Like a pivot that isn't the end of personal genomics, but maybe, just maybe, the kind of structural shakeup needed to kickstart its real potential, like the beginning, not the end.
That's a really interesting way to frame it. Based on these sources, they're arguing this moment, yeah, it looks like a crash, but maybe it's the industry, or at least 23andMe, finding the conditions it actually needs to deliver on that big promise.
Exactly. So that's our mission for this deep dive. We're going to unpack these sources, trace 23andMe's path to bankruptcy, understand the really quite surprising turn of events that happened next.
Right.
And explore why, according to this material we have, this whole thing might signal the actual start, the real dawn of the personal genomic information revolution, not its, quiet death.
Okay. So to really get that surprising twist, we probably need to first quickly recap the journey that got 23andMe there. The story most people already heard, basically.
Yeah, and the sources are pretty clear on that path. They point to the challenges the company hit, especially after, remember, going public in 2021 through that SPAC deal.
Oh, yeah, the stack boom. That was meant to be the big injection of cash, right?
Yeah.
Fast track to the public markets.
Supposedly. But the sources, they detail what happened next. Poor performance, the stock price just cratering from those initial highs. They just weren't meeting Wall Street's expectations.
No, and it wasn't just the financials, was it? The sources really emphasize other things that were chipping away at trust, both investor trust and, crucially, public trust.
You mean the data issues?
Absolutely. Key points in the material are, one, that big data breach they suffered, and two, these sort of ongoing privacy concerns that weren't just theoretical worries.
Right, they had real consequences.
Yeah, the sources mentioned privacy lawsuits from like 28 state governments and even federal hearings. So this wasn't happening in a vacuum. It created this very public cloud over how safe and ethically handled all that sensitive genetic data really was.
Okay, so you've got the intense pressure cooker of being a public company needing short-term wins, combined with these massive, very public crises around data and privacy. That's quite the storm.
It really is. And the sources draw a direct line from all those mounting pressures and setbacks straight to the Chapter 11 filing in early 2025.
So when you just look at that sequence, SPAC excitement, stock collapses, privacy scandals, then bankruptcy, it makes total sense why the common view, which the sources acknowledge, was, okay, this is it. The personal genomics business model just doesn't work.
Exactly. And it seemed like the demands of being a standard for-profit public company were just fundamentally clashing with the unique challenges and the level of trust needed to handle something like personal genetic data at scale.
And for a moment there, that felt like the end of the chapter, bankruptcy. But this is exactly where these sources we've looked at drop the unexpected twist.
Right. The bankruptcy process itself, as they describe it, 23andMe's assets went up for auction. Standard procedure.
Yeah. Trying to get some value back for creditors, maybe shareholders if anything's left, usually attracts other companies looking for a bargain on good assets.
And the sources mention a major player did step up, a big name in biotech.
Yes, exactly. Regeneron. The sources say they put in a pretty substantial bid, $256 million, to buy 23andMe out of bankruptcy.
Okay, that sounds plausible. A large established research company of absorbing 23andMe, probably very interested in that huge genetic database for their own R&D. Makes sense.
Totally logical outcome. But that wasn't the winning bid, was it? This is the part the sources really spotlight as the big surprise.
It really is the twist. The sources reveal that, kind of dramatically, The winner of the auction was none other than Wojcicki, the co-founder, the former CEO.
Wow, okay. Buying her own company back.
Yes. But here's the kicker you mentioned earlier. She didn't just buy it back personally. The purchase was made through a nonprofit organization, one she set up specifically for this, called the TTAM Research Institute.
Hold on. A nonprofit outbid a giant for-profit corporation like Regeneron in a bankruptcy auction where usually money talks loudest. How did that even happen?
Well, the sources explain her winning bid was higher, $305 million. It beat Regeneron's $256 million offer. Apparently, the auction, as one source describes it, had this final round structured to really push the price up for the stakeholders.
Okay.
And Wojcicki, through this nonprofit vehicle, just came in with more money, which, the sources suggest, shows just how deeply committed she was to the original vision, enough to leverage significantly more capital via this new structure than a major biotech firm saw in just the commercial value.
That is genuinely surprising. The original founder, using a nonprofit, outbidding a huge industry player to reclaim her company from bankruptcy, it just completely flips that initial script, doesn't it? That financial failure, game over idea. It makes you immediately ask why? Why go to such unusual lengths? What's the point of the nonprofit structure?
And that's exactly where the sources go next.
Yeah.
They argue this wasn't just about keeping the lights on. It was a deliberate, profound, structural reset. Maybe even a necessary one for the core mission to actually survive.
A structural reset. Okay, but how does changing the tax status, basically, from for-profit public to nonprofit, fundamentally change the game? What's the real difference, according to the sources?
Well, the main argument coming through in these materials, especially when they talk about Wojcicki's vision, is that the nonprofit structure finally frees the company to chase what one source calls her long-held dream, and to do it without the built-in conflicts you get in a for-profit model that has to answer to shareholders demanding returns.
Right, the quarterly earnings pressure. And that dream, how did the sources describe it?
It's framed as launching this personal genomics-based information revolution. The vision isn't just, finding out you're 10% Irish. It's way bigger. It's about using genetic insights to fundamentally help people redesign their health, their life choices, and even shaping, quote, the medical future of humanity as a whole. That's a massive long-term goal, clearly more public good than quick profit.
Okay, I get the vision is ambitious, but how does being a nonprofit specifically help achieve that? What does it enable that being a public company didn't?
The sources really hammer this point. The shift to nonprofit reinforces what they call purity of purpose, and it highlights the public nature of data.
Purity of purpose. So you mean the legal setup itself forces them to prioritize the science, the mission, the public benefit over just making money?
That's exactly it. As the sources explain it, the nonprofit model legally obligates the organization to stick to its stated mission. It takes away that constant, relentless pressure for quarterly profits, for maximizing shareholder value, which often forces companies into short-term thinking.
Right.
Instead, the focus can genuinely be on the long-haul science, the big research questions, the overall social value locked in that genetic data. This structural change, the sources argue, allows them to treat the genetic data less like a product to be sold and more like a strategic information asset that needs careful stewardship for science and, well, humanity.
That distinction feels really important. It sounds like the sources are suggesting the old for-profit way created this basic tension, this conflict with the kind of long-term view and deep trust you absolutely need in genomics research.
Precisely. And remember those earlier issues, the data breach, the privacy lawsuits we talked about.
Yeah.
The sources explicitly link this nonprofit move to concrete actions designed to tackle those head-on and rebuild that broken trust.
Really?
Yeah.
What specific commitments are mentioned?
Well, they highlight things like, under the new nonprofit setup, significantly boosting data governance. So stronger safeguards for customer privacy, clearly stating they'll accept data deletion requests, giving people more control back, and setting up a consumer advisory committee.
Ah, okay. So independent oversight and feedback.
Yeah, seems like it. So it's not just changing the financial plumbing, it's also a very public commitment to handling the data differently, more accountably.
So the sources are framing this as a package deal. The structure and the practices change together.
That's definitely the impression. By making these pledges within a nonprofit framework, the organization is trying to signal a real shift in identity and philosophy.
Yeah.
You're saying, look, the value we want to create is tied to using this data responsibly for the long term, for science and public benefit, not just for the next quarterly report.
Okay.
And this whole pivot, according to the sources, is positioned as the make-or-break step needed to get past the limitations of the old model and actually pursue that real vision of a genomic information revolution. So what looked like a collapse?
Yep.
Maybe it was actually a painful but necessary transformation to align the structure with the mission.
That reframing is pretty compelling. It does make you wonder if the core problem wasn't really the idea of personal genomics, but maybe the business structure chosen to deliver it. If the for-profit pressures just didn't align with the need for deep trust and long-term R&D, maybe nonprofit is a better way.
That definitely seems to be the central argument the sources are building, and they suggest this whole 23andMe saga, the bankruptcy, the nonprofit rescue, it holds bigger lessons for the entire personal genomics field.
How so? How does one company's very specific drama apply more broadly?
Well, the sources use this as a case study, basically, to illustrate the inherent difficulties these types of companies face when they try to operate purely as standard public for-profit entities. That constant pressure for short-term financial results from the market. It just might be fundamentally mismatched with the long timelines needed for serious R&D, the huge investment required, and above all, maintaining that absolute rock-solid consumer trust you need when dealing with genetic data.
So this whole episode might be signaling that the industry itself needs to think about different models if it wants to really succeed long term.
That's the implication. The sources definitely explore this idea of a nonprofit digital health platform built around genomic data as maybe a more viable or perhaps even essential model for where personal genomics needs to go. And critically, learning from 23andMe's very public stumbles on data security and privacy, the sources stress that the entire industry needs to get serious about stronger, clearer, ethical, and social guidelines. That's if they ever want to genuinely win back and keep broad public trust.
So it's not just about the tech anymore.
Not at all. The future depends just as much on building that trustworthy foundation, something the initial for-profit wave perhaps struggled to maintain under all that market pressure.
Okay, so the big takeaway then from synthesizing these sources, what looked like the end of the road for personal genomics, with a flagship company going bankrupt,
is actually presented in this material as maybe the painful, messy, but ultimately crucial step for the industry to find the right structure, the right ethical footing to actually deliver on its potential.
So the idea didn't fail. Maybe the initial commercial vehicle just wasn't the right fit.
That's the argument. The bankruptcy and the nonprofit rescue are framed as the industry starting to adapt, learning some really hard lessons, and maybe, just maybe, building something more sustainable and truly aligned with that grand long-term vision.
Right. So let's just quickly recap this deep dive based on the sources. We traced 23andMe's path as a public company hitting those major speed bumps, financial trouble, stock tanking, serious privacy blowback, all leading to bankruptcy.
Yep. But then the story takes that sharp turn. Instead of being absorbed by another commercial giant, the company gets bought back by its founder through a nonprofit, outbidding a major biotech firm to do it.
And the core reframe from the sources is that this is way more than just saving a company. It's a fundamental shift in structure to nonprofit, specifically aimed at reprioritizing the science, treating data more like a public trust, and rebuilding that vital user confidence by tackling past privacy issues head-on.
This view suggests that bankruptcy wasn't necessarily proof that personal genomics failed, but maybe it was the catalyst needed for the industry to find a new way to operate. A model potentially better suited to chasing the deep potential of genomics without some of those conflicting pressures of the purely commercial public market structure.
Yeah, it positions this whole event not as the sunset for personal genomics,
but potentially as the structural dawn needed to finally achieve that long-talked-about genomic information revolution.
Which I guess leaves us with a pretty big question for you, the listener, to chew on after hearing all this. Now that you have a nonprofit, mission-driven, supposedly acting as the steward for this enormous, incredibly personal genetic database, how does that actually change the balance? The balance between pushing for the public good, driving science forward, and fiercely protecting individual privacy. What new possibilities, or maybe even what new kinds of challenges could actually arise from this kind of unprecedented setup? Something to think about.